Mortgage rates barely moved this week, but don't let that fool you. We got one of the biggest jobs report surprises we've seen in months, and it completely changed the market narrative heading into the weekend. If you've been hearing that the economy is slowing and rate cuts are right around the corner, Friday's report may have thrown a wrench into that idea. So let's break down what happened. Coming into this week, the data was pointing to a softer labor market. ADP came in weaker than expected. Jobless claims were higher than expected. Layoff announcements across the board increased. All of this was helping the bond market and supporting the idea that the Fed could have room to cut rates later this year. Then this morning's jobs report changed it all. Economists were expecting 85,000 new jobs created. Instead, 172,000, more than double the expectation. The bond market reacted immediately. Treasury yields moved higher, bonds sold off, and mortgage rates came under pressure. And as you're watching this, that pressure is likely to continue. Now, here's the interesting part. Despite the volatility this week, rates still remained exactly where they started, or basically exactly where they started. Monday, we were at 6.59. This morning, we opened at 6.58. So where the headlines were dramatic, the overall rate movement wasn't. Several times this week, rates reacted more to geopolitical headlines involving Iran and ongoing peace negotiations. That's important because oil impacts inflation expectations, and inflation expectations impact interest rates. So for most of the week, the market was balancing two competing stories: a labor market appearing to be cooling and geopolitical uncertainty that could keep inflation elevated. Friday's jobs report tipped the scales back towards economic strength. So what's the takeaway here? The economy remains more resilient than people may have expected. The Fed still has room to be patient, and mortgage rates remain stuck in a relatively tight range. If you're talking to buyers this week, the message is simple. Waiting for the perfect rate environment may not be the best strategy. The market continues to prove that predicting rates is incredibly difficult. Focus on the payment, focus on the opportunity, and focus on the long-term plan. If you found value in this content, please like, subscribe, share. We want this message in front of as many people as possible. As always, let's make it a fantastic Friday and an even greater weekend. Thank you.